of accounting paper 1, May, June 2020. The first question says, which are examples of bookkeeping? When we talk about bookkeeping, just about recording transaction. So entering details of a check is part of the recording transaction. And so what are the examples? Entering is part of it. Entering details, whatever you see, entering details are part of it. So entering details of a check is bookkeeping. Entering details of goods purchased is bookkeeping. Producing an income statement to calculate the profit for the year, that is accounting. So that is accounting because it involves computing. So it's accounting, it's not bookkeeping anymore.
Yeah.
Then 4, recording details of credit sales in the account of the credit customer. That's also bookkeeping. So the answer is 1, 2, and 4. So it's B. Question 2. How does the trader use the information provided by a financial statement? What do we use a financial statement for? We use it to compare the performance of the business year in, year out. But that's not the only thing you use financial statement for. You can also use it to compare your business with those of your competitors. Mm-hmm. That's when you apply the principle of comparability. That's the last question there. I think the last question talks about comparability.
Yeah.
Question 35. So you can use that. It's one of the reasons why we prepare our financial statement to compare our business with those of our competitors, not just our business of this year compared to last year alone. So do you get the point I'm making here? Do you get the point or not?
Mm.
They say, what does a trader use financial statement for? We use it to compare the business performance. Because as soon as the financial statement is produced, or as soon as the financial statement is prepared, we're going to know the profit for the year. I'm going to know the value of our assets and liabilities, yes or no? So these are basically the performance of the business. So if our profit is increasing, it means we've done well than last year. If our profit is falling or we're making a loss, it means we are underperforming. So that is what the point is. Mm-hmm. So that's the first thing. The other reason why we could prepare our financial statement is to follow the principle of comparability, which means that you can compare your financial statement with those of your competitors. Well, when you don't prepare a financial statement, there's nothing you want to compare.
Yes.
Is it clear?
Yes.
Question 3.
Sometimes it's hard to compare because they're like using other methods.
No, except for depreciation. Because in accounting, it is international accounting standard. So accounting in Libya is same as accounting in UK, wherever. Because you have to use the international accounting standard, IAS.
Oh, yeah.
Clear. Question 3. A trader bought new fixture. He paid half of the purchase price in cash and agreed to pay the balance in 2 months' time. How does this purchase affect the accounting equation? The asset of equipment or assets has increased. Mm-hmm. But owner's equity does not have any effect with owner's equity. Then the liability has also increased. Yes. As soon as he pays, the asset of cash, current asset would reduce. Here, non-current asset has increased. So when he pays, current asset would reduce, liability would reduce. Clear?
Yes.
Okay. So question 3 is D. Question 4. On 2nd of April, Nina received a check from Sava, a credit customer. On 12th of April, the check was returned unpaid by the bank. That is a dishonored check. Yes. A dishonored check will have a debit balance. Do you understand?
Yes.
In your cash book, dishonored check is always on the debit side of your cash book. So the bank is giving it back. So the bank will have the credit. Clear? Yes. Question 4, that's D. Question 5. Anne is a trader. On 1 of April, Cindy account is in Anne's ledger showed the credit balance of 520. The following transaction took place during April. Anne returned goods worth of $30. That will return goods will be, that means there will be a credit note from Cindy. Mm-hmm. So 30 will be deducted from the 520. I think that is clear.
Yes.
So on 14th of April, Anne bought goods 210 from Cindy and paid cash. That was immediate payment. So it doesn't have anything to do with the transaction. Do you understand?
Yes. Yes.
So in Cindy's account, the statement of account of Cindy would have 520, which is the total invoice, minus the credit note, which is 30. So the balance is 490.
So when they say paid in cash, it's not in the
cash. Paid in cash is an immediate payment. It doesn't involve trade creditor anymore. Okay. Trade receivable, sorry.
Yes.
So question 5 is A. Done, right? Mm-hmm. Question 6.
Okay.
What?
No, 6.
Question 6. Goods bought on credit by Tumelo from Tebego are returned before they are paid for. Tumelo keeps a full double entry. Where will Tumelo record the returned goods? Purchases, you bought goods, that is purchases ledger. And when you return it, that will be in the general ledger. It will be in the general ledger, under your general ledger, because returns are not always. So not all customers will return. So you don't have a personal account for returns. You have an individual account for purchases, but not for purchases returns.
Yes.
Returns are general ledger. Is it clear?
Yes.
Question 7. They've supplied goods to Peter on credit. On 1 April, Peter owed Dave 440. They've sent or received the following documents in April. On 7th of April, there was an invoice of 360. On the 12th of April, there was a check payment for 429. Then on 13th of April, a debit note. A debit note would have come based on the return of those goods. And as soon as Dave received the debit note from Peter, Dave would issue a credit note. Do you get it? So
yes.
The value will be the 440, which was owed before, plus 360 on the invoice, which is 800. So a payment was made of 429. Payment of 429 was made. Then the credit notes. You less the credit notes. Where is it? So we have 800 with, I did it somewhere. Yes, 440, that's 800 minus the payment on the debit note is 429. It will be 421 minus 50. Please let me calculate it. We have 800, which was the value now, minus 429 minus 50. That's 321. It's 321 minus 11 if the payment was made on that at the end of the month.
321
minus 11.
Wait.
Discount will be given, right? But you won't give discount until payment was made.
Oh, yeah.
So the value, the check will still be 429. If the payment is made on the 30th, then you have to take the discount away. So for the value is 321 minus 11, which is a discount, gets 310. Is it clear or not?
Yes, yes.
So it's B. Question 8. A business sold goods with a list price of $50 each. The term trade where trade discounts for more than 20 items bought, 10%. So cash discount if customer pays within 30 days, 4%. So how much was received in full settlement from a customer who bought 25 items and paid after 35 days? First, buying 25 items is more than 20, so it's going to have the trade discount, which is 10%. So 125, $50 multiplied by 25 pieces is 1,250. Then 10% of it is 125. 125 minus, you take 1,250 minus 125, you have 1,125. So as that is done, then we check the payment was made after 35 days. So that means you would have forfeited the trade the cash discount. So 1,125 is what's going to be paid. So question 8, that's C. Clear, right?
Yes.
Question 9. Paul rents premises from John and pays the rent by credit transfer. That's through a bank transfer. So how would John record this transaction? John has paid. Paul rents it. So John would have received that cash through the bank transfer. So John's account in the bank will be debited. And the rent receivable will be credited. Paul, which is who? Paul will be credited. Is it clear? Do you get it or not?
Yes.
Now, it's not about Paul, it's about John. John's bank account will receive the cash. That is a debit. And Paul would be the rent receivable.
Yes.
I believe you went to do Paul's account instead of John's account.
Yeah.
That's it.
Exactly.
Is it clear now?
Yes.
Question 9. Question 9 is C. No.
So,
A. Sorry, A. Question 10. Sita discovers that 1,000 received from the sale. Sita discovered that 1,000 received from the sale of fixtures had been entered in the sales account. Which journal entry corrected this error? So the sales account was initially credited. So it has to be debited now. The sales account was initially credited.
Yes.
Now you have to debit it. So our sales account will have a debit balance. Then the asset was disposed. It's a disposal of assets.
Yeah.
So its answer should be between A and C. But it can't be A because they're talking about sales, not check. So the answer is C. Is it clear?
Yes.
Question 11. The total of the trial balance did not agree, and 200 was debited to a suspense account. On checking the books, it was found that 2 errors had been made. 700 has been recorded in the sales journal as 770. That is overcast by $70. The sales journal has been totaled incorrectly. Because it has been totaled incorrectly, that means $200 was missing. Do you understand? The sales journal was overcasted by $70. But based on the analysis, they said the whole account in the sales journal was totally incorrect. So if it is totally incorrect, that means the 200 we put in suspense comes from the sales account. Do you get it? So there are other errors that would have occurred through the sales account, not only this transaction.
Yes.
Do you get the point I'm making there?
Mm-hmm.
For this transaction is $70 that was overcasted. But they said the total of that sales journal has errors. So that means the $200 that we're talking about that has been in our suspense account will be based on the sales journal.
So it's totally incorrect.
Do you get it? So the answer is C. Now B, sorry. Question 12. You got question 12 wrong, I guess.
Yeah.
I see. They said the income statement of a business showed a loss for the year 16,000. That's a negative 16,000 minus 16,000. That's what it means.
Yes.
On checking the books, the following errors were discovered. No adjustments have been made for insurance prepaid. Prepaid insurance, that is an asset. So you had it. So minus 16,000 plus 4,480. Then no entry has been made for bank charges. Bank charges were supposed to be deducted. Yes or no? So you have minus 16,000 plus 480,000 minus 620, which is 16,140. The loss is 16,140. Is it clear?
Yes.
Question 12C. Question 13. What would result in a cash book balance being lower than the balance showing on the bank statement? So this could be as a result of a bank transfer. Because most of the time, bank transfers, cash, we don't record it as a business because it could be a bank transfer. It's a bank transfer. So I might not be aware that the transfer was done, or I might not receive a credit alert for such transaction. So because I did not receive a credit alert for such transaction, I would not record it in the debit side of my cash book. So with bank reconciliation, we'll be able to detect it. Do you understand?
Yes.
So the answer is C. Is it clear?
Yes.
Question 14. Tembi is preparing a sales ledger control. She needs to know the total for goods which have been returned by credit customer. Goods returned by credit customer is your return inward. So that's the sales returns journal. And the amount owed by credit customer which has been written off as a recoverable debt. So your recoverable debts will be part of the general journal. You don't have a recoverable journal. You have general journal for it. Is it clear? Yes. So the answer is D. Question 15. Are you with me, please?
Yeah.
The following payments were made when a new machine was purchased. So purchasing of a new machine, that is capital expenditure. Are you with me?
Yes.
When you purchase a non-current asset, it is considered as capital expenditure. So what are those items that will be considered as capital expenditure in this thing? We have charge for delivery of the machinery. That is carriage inward. It's part of it. The machine is there. Without it carrying, the cost of transportation is part of a capital expenditure. Are you with me?
Yes.
Cost of installation is part of capital expenditure. Training to use that machine, it's not. It is revenue expenditure. Insurance on it is not capital, it is revenue expenditure. Are you with me?
Yes.
So training costs on machinery, insurance on machinery are all revenue expenditure because every year, year in, year out, you train workers, year in, year out, you pay your insurance. Is it clear?
Yes.
So our capital expenditure here are the cost of machine, which is 32,000, the charge on delivery of the machine, which is 1,800, and the installation of the machine, which is 1,300. The total is 35,100. Did you get it right?
No.
Yeah. So 15 is C. Is it clear now?
31?
35,100, yes. C.
100. Yeah.
Do you get it? Do you understand it now?
Yeah, I understand it, yeah, but I didn't get it.
I know you didn't get it right. It's not a problem. Do you understand now?
Yes, yes.
That's why I explained further. I know you're going to get it wrong. When you spend on capital as non-current assets, the cost of installation is part of your capital expenditure. The carriage of that machinery or equipment is part of capital expenditure. Whatever you do to that asset to add value to that asset is part of capital expenditure. So like buying a laptop, installing the software into the laptop is capital expenditure. Do you understand? So whatever that add value to that expenditure, to that asset, to that non-current asset is part of capital expenditure. But those expenses that will be recurring are revenue expenditure. Do you understand?
Yes, sir.
Okay. So the answer is C. Question 16. In non-current assets, are you there?
Yes.
Did you get it right?
No.
No. In non-current assets were depreciated at the end of the first year of ownership using the straight line method based on the following information. I worked it out. For the straight line method, we have, and that was we did in the class today.
Yeah.
For the straight line method, we have 20,000 minus, the straight line method is cost of non-current asset minus residual value divided by divided by the useful life or the economic life or the lifespan of that asset.
Yes.
So 20,000 minus 4,000 divided by 4 gives us 4,000. So depreciation charged is 4,000. That is done. Now they said it was found that the reducing balance method at 30% per annum should be used instead. So instead of using straight line method, we should have used reducing balance method. So to use reducing balance method, the value is the cost of the asset divided by multiplied by 30%. 20,000 multiplied by 30 over 100 gives us 6,000. So 6,000 was supposed to be used, but we used 4,000. Do you understand?
Yes.
So that means our profit would have been overstated because when your expenses is your expenses was supposed to be 6,000, you used 4,000.
Oh yeah.
So that means you have overstated your profit by 2,000. Do you understand? So the answer is
B.
B. No.
Yeah, B increased by 2,000. Effect on profit.
Profit was overstated. Yes.
By 2,000.
I didn't do it. Why not? What was the effect on profit for the year?
Yeah, the effect is that it increased by 2,000.
Yeah, after correcting it, no, it will be decreased by 2,000 after correcting.
What?
The answer is A. After correcting the mistake,
decreased by.
yeah, you would reduce the profit by 2,000.
Yes.
The profit is overstated. Yes, I know. But what the question is asking us that now that we have corrected the mistake, what would have happened to our profit? Our profit should be reduced by 2,000.
Yes.
Do you understand? So it's A. Do you want to check or what? Okay. Question 17. Ezeve purchased a motor vehicle costing 8,000 on 1st of January 2018. It depreciated at 40% using reducing balance method. Which journal entry records of depreciation for the year ended will be 31 December 2019? The cost is 8,000. Depreciation is by 40%. So in the first year, that's in 2018, it will be 3,200.
Yeah.
So reducing balancing method would be 40% of 8,000 again, which is 3,200 minus 8,000, which is 4,800. So in our income statement, it will be 40% of 4,800 will be recorded in our income statement, which is 1,920. So our income statement will have 1,920 as a debit, and the provision for depreciation, we have 1,920 as credit. Is it clear?
Yes.
Did you get it right?
Yes.
Great. Question 18. Alice's financial year ends on 31st December. The balance on her book are included commission receivable 250 debit, rent receivable 500 credit. What do these balances represent? Commission receivable represents an income outstanding. Commission is part of your income statement. Commission receivable is an income that is outstanding. You add it to your gross profit. Clear?
Yes.
Commission receivable. Then rent receivable, that means prepaid. You have paid rent. Yeah, it's part of your statement of profit, statement of financial position.
Yes.
As prepaid.
Plus B.
Yeah, it's B. Do you get it right?
No.
Is it clear now or not?
Yes, yes. Let's see.
Oh, 18. So go to question 19. Annual rent income due for Kuma, a tenant is 3,600. Are you with me, please? I worked them out. It's 3,600. Then it was discovered that, no, sorry. At the start of the year, Kuma had prepaid rent of 900. So 900 was paid. So take away that from 3,600. We have 2,700. Clear? Annual rent income due was 3,600.
Okay.
At the start of the year, there was a prepayment of 900. You take it away from the 3,600. You have 2,700.
Mm-hmm.
At the end of the year, the rent Kuma was owing
2 months.
2 months. The 3,600 divided by 12 is 300. So that means for each month is 300. So that means it's owing 600. So 600 minus 2,700. 2,100. Do you get it?
No,
It's
yeah, I
a-
get it. Yeah, but
Do you get it now?
yeah, I get it now.
Should I explain again or you got it?
No, I get it. Yeah.
Okay, it's 2,100.
Mhm.
Because 2,700 was left. Then it was paid. But they said it's owing for 2 months. You take 2 months from it.
Yeah.
That's it, 2,100. It's A. Question 20. Jewel's inventory on 31st December 2019 was valued at 4,800. Goods cost 1,100. It was discovered that goods cost $100 has not been included. Goods cost 170 has been included at net realizable value of 210. So the total goods were 270. Put that in mind. The total cost of goods is 270.
170.
Yeah, 270. But the net realizable value for the goods is 210. So the goods has been understated. The value of the goods has been understated by 60. The value of the goods has been understated by $60. Is it clear? So if the value of goods has been understated by $60, profit would have been understated by $60. Yes or no?
Yes.
Inventory has already been understated by $60. Then what happens to equity?
Increase. I understand. Yeah.
It will be understated. Why? Because we have talked about our net realizable value, which goes to part of our assets.
Mm-hmm.
And when you calculate it, profit, if profit is understated, equity will be understated because you add profit to equity.
Yes.
Do you get it?
Yes.
So 20 is D. 21. The owner of a business took goods for his own use, but forgot to make an entry in that account. So what happened? What was the effect of this error? So drawing was deducted. Drawing was supposed to be deducted. That means drawing I'm talking about is goods used for own use. Was supposed to be deducted, but it was not.
Oh, to be overstated.
So which means profit will be understated.
Yeah.
Yeah, it will be understated because it's supposed to be paid for by the owner. Now the business has paid for it. It will understate your profits.
Yes.
Do you get it now or not?
Yes.
You got it wrong.
Yeah, I got it wrong.
Okay. Is it clear?
Yes. So what is the answer already?
Yeah. No, it is C.
Oh, see. Okay.
It's not going to affect the capital employed.
Yeah.
Because what is capital employed? Capital employed is total asset used by the business.
It won't affect.
It won't affect it. It's an asset used by the business, so it's not going to affect this. So it is C. Question 22. Rajit and Sonny formed a partnership on 1 January 2019, but did not prepare a partnership agreement, deed of partners.
Mm-hmm.
Now, they provided this following information. They decided to draw up the deed of partners. Which item would be most beneficial to Rajit? It is the interest on capital because Rajit has the highest capital there.
Yeah.
So he wants to know the reward of having such capital. So the answer is A. Done.
Yes.
23. Ari and Jane are in partnership. The following information refers to Ari for the financial year. Salary, drawings, share of profits. The opening credit balance on Ari's current account was 28,200. So Ari has 28,200 already. So they said, what is the closing balance for Ari in the current account? It will be 28,200, which was the credit balance, plus 8,000, which is the salary, plus 4,600 minus 2,800. So the answer is 38,000. B. Do you get it right?
Yes.
Great.
Now this one, I don't know how to do it.
24.
Yeah.
Try to watch. I did statement of equity account in one of my videos for the A levels. Change equity, change statement of changes in equity. For equity, what are those items in your equity? Your share capital, your general reserve, your retained earnings. These are a part of your equity. Okay. So yeah. So now for our equity, we have our share capital, which is 40,000, the general reserve, which is 8,000, retained earnings, which is 65,000. Liability is not part of your equity. It's not part of the equity. It is when you have your equity plus liability, when you put them together, that's when you talk about equity.
Yes.
That's when you talk about equity and liability. But there they say you should calculate the total equity. And equity is the amount of money that comes to the business through shareholders or through the profit made by the business. Loan, the venture is a loan. It's not capital. So it shouldn't be considered as capital. Do you get it?
Yes.
So we have 40,000 plus 8,000 plus 65,000, which is retained earnings, plus profit for the year, which is 42,000, less dividends, which is 10,000. So the total is 145,000. Yeah. Is it clear now?
Yes.
Clear, right?
Yes.
25. Did you get 25, right?
Yeah.
Okay. It's A. It's a long-term liability of the company. 26. They said, which cost is part of the prime cost for a manufacturing business? The prime cost items are direct material, direct labor cost, and carriage inward, because carriage inward is part of your direct material.
Yes.
So A is the answer. 26. 27. Did you get 27 right?
Yes.
Great. They said, what is here? You know manufacturing account anyway.
Yeah.
They said manufacturing business provide the following information. What was the factory cost of production? Factory cost of production is your prime cost, add factory overheads, add opening work in progress, less closing work in progress.
Okay.
So it is 236,000 plus 42,000 plus 8,000 minus 6,000, 280,000. D. 28. You got it wrong.
Yeah, I didn't add recovered debts and
You're supposed to add it.
yeah.
Because they are part of your.
Yeah, I forgot about it.
So here they say it will provide the following information. What was the amount of the credit sales? So we have our closing trade receivable, which is 8,500. You less opening trade receivable, that's 3,500. You add total cash received, 34,700, making 38,200. Then you had recoverable debt and discount allowed to it.
You less the closing was the opening.
You less opening.
And add closing, yeah.
Yeah, because closing is the value.
Yes, yes, yes.
Is it clear? It's 38,585. Is it clear, please?
Yes.
That's D. 29. Did you get 29 right?
No. 29, 31.
Okay. So 29, listen now. Governor provided the following information for the year: revenue, opening inventory, closing inventory, and the markup. Governor took goods 7,000 for his own use. What were the purchases? We prepare our income statement. We have our sales for 90,000.
Yeah.
Purchases is unknown. Yep. You leave the item for purchases. Our opening inventory is 8,000. Our closing inventory is 2,000. Yeah. Our goods for own use is 7,000. Now the workings. The markup is 50%, right? 50% is 0.5. 0.5 multiplied by 90,000 of revenue gives us 45,000. Yeah. So 45,000, our opening inventory plus goods used. This and this. This and this will be added together to take away from 45,000. Yeah. Goods for own use. You know, you take it away from your revenue. Purchases. You're supposed to take goods for own use away from your purchases.
Oh yeah.
So you're going to add it to your revenue. You're going to add it to your goods sold.
Okay.
Because this is the total goods sold. It's supposed to be sold, but you take it away from your purchases.
Yeah.
Got that? Opening inventory, you're supposed to add it to your purchases. Yes or no?
Yes.
Then you add it to your sales too. So 8 plus 7,000 is 15,000. 15,000 minus your markup gives you your 30,000. So that gives us our gross profit. So gross profit, that's our gross profit. Gross profit minus sales is 60,000. Gross profit minus sales is 60,000.
Yes.
Now, our opening inventory minus goods for own use.
1,000.
Goods, opening inventory minus goods for own use is 1,000. So that is what you add to your purchases, making 61,000. Is it clear? So the answer is 61,000.
Yeah.
Question 30 now, right?
Yeah. Now we're going to the.
Okay. Those ones are easy anyway.
Yeah.
Samelo liquid acid ratio was higher on 1st of January, then it was lower. That's what they mean there. What could have caused this? For liquid ratio, it means what can be easily turned to cash. It's your trade creditors, or trade debtors, or trade receivables. So it means they have reduced. That means you have received cash. Do you understand?
Yes.
Okay, so the answer is D. Question 31. The following ratios have been calculated for a trader. Did you get it right?
I knew it's the right question to see, but I no.
Let me explain to you.
Because profit margin means that it's not profit.
Okay.
Yeah.
All right. So we have the profit margin 15% to 20%. So the profit margin has increased from year 1 to year 2, which is 20%.
Yeah.
But return on capital employed. Return on capital employed fell. Why would return on capital employed fall? What is the formula for return on capital employed? The formula for return on capital employed is operating profit divided by capital employed multiplied by 100. So the amount of capital employed has increased. But if it has increased, the return on capital employed would reduce because a lot of people have to share part of the returns now. When the capital employed increases,
yes,
your return on capital employed would fall because now a lot of investors have invested into the business. Do you get what I'm saying here? Your profit, if your profit is constant, your profit stays the same, but your capital employed has increased. What will happen to your return on capital employed to fall? Do you get it?
Yes.
So that's what that means. Potential investor, that means more money has been added into the business, but the return has reduced because you have to pay back the owners of the business the amount put into the business. Is it clear?
Yes.
Question 32. Yes. Which external parties would be interested in the accounting ratios? Do you get it?
Yeah, all of them.
They are investors, but they are not even investors. They are potential investors.
What? Potential
investors, not investors.
Yeah, because it's interested.
Yeah, they are potential investors. So it's B though. We leave it like that. Yeah. 33. At the end of the financial year, a company did not account for the unused stationary value at 50. That is the principle of materiality. Yeah. What it is, what you should only account for things that are used within the business. Yes. Is it clear? Yes. Question 34. A trader wrote off the balance on the credit customer's account as irrecoverable debt. Which accounting principle was applied? This is the principle of prudence. You must not overstate your asset or overstate your profit. You must not understate your liability or understate your loss. Because if you don't apply prudence here, you would have understated your liabilities.
Yes.
Do you understand? So 34 is D. And 35, the last one. A limited company applied the accounting objective of comparability in preparing its financial statement. What is the effect on this on the interest party? Like the fourth question, yeah. Like the first.
Second.
The second, okay. So comparability, the principle of comparability means that you are able to compare your financial statement with those of your competitors. Is it clear? Yeah. So the answer is B. So that ends paper 1, 2020 May, June.